Well, greetings to all my investment clients. My name is Walter Meziers, your wealth manager, CPA tax advisor, recording this day before 4th of July. First of all, I want to wish all my clients and all your family members happy Independence Day while celebrating 250 years of America. What an amazing, amazing country. Just as a side note, personal side note, as most of my clients know, I was born in Poland. I am so grateful that my parents decided to immigrate to the United States, and thankful that I was able to achieve what I achieved in my career and pretty much living the American dream. So thank you, America. I truly, truly am blessed by the independence that America offers. So God bless America, and wishing all my clients an amazing, amazing Independence Day. Hopefully you're celebrating with family, doing tons of barbecues. I know that's what I'm planning with family tomorrow. So again, happy 4th of July. And happy birthday, America, celebrating 250 years. So let's get into our weekly stock market recap. But before I go into details of what the stock market did and the economic landscape, just important disclosure. This video is not intended as investment advice or a solicitation to buy or sell any securities. Please seek investment advice from your own advisor. For those watching who are not my clients, do not make any changes to your portfolio. Again, this is not intended for you, for anyone to really rely as investment advice. If you do want to sit down with me and review your portfolio, other than my clients, would be more than happy to do that, to kind of do a risk analysis of what your portfolio, not that it's a good or bad investment, it's how much risk you have in your portfolio. So on that note, let's get into our weekly stock market recap. This is as of July 2nd. Obviously I'm recording this on Friday. The markets are closed today. So Dow Jones for the week was up 2%. S&P 500 was up 1.8. NASDAQ was up 2.1 for the week. And Russell 2000 actually was negative. Just a quick reminder to my clients, I did get out of the market completely on June 30th. And there were some signals that were concerning which direction the market may go. And we probably will be getting back into the market maybe after 4th of July celebration, where everything kind of settles down. So stay tuned. We are safe out of the market, and it was kind of the right call. Markets did pull back a little bit, but again, our goal is to make money for our clients no matter which way the market is going. Also, notable, gold is actually down quite a bit. Crude oil is at 68. VIX is at 16.8. So kind of what we call calm. So what drove markets this week? A tale of two winds. The Dow hit record highs. The AI tech trade cooled off. Meta, Micron, AMD, and Tesla all fell sharply as investors questioned stretched valuation, meaning they're a little bit overvalued, overshot. So that's really what's been moving the market, AI technology. But sometimes a pullback is healthy, and there could be a pullback 15-20%. That's what some of the experts are saying. Whether it's next week, within 2 weeks, not sure. Jobs report cooled off. June payrolls rose just 57,000. Expectation was 113,000. So breaking 3-month hot streak. Unemployment ticked down to 4.2. Softer higher eased fears of further Fed rate hikes. The problem with the jobs report is nobody's talking about that. The the May jobs report was revised by over 40,000. So again, the job market is not resilient. That's many experts are saying. The unemployment numbers are kind of misleading. Again, when somebody stops looking for a job after 12 months, they're just no longer counted as unemployed, which is kind of silly. So the true unemployment, some experts are saying, is more like 6.47, almost pushing 7%, because people who have given up on looking for jobs are not counting. Kind of silly, in my opinion. Rotation into value, money moved towards financials, consumer, dividend payers. So kind of defensive. People are getting a little concerned that maybe the market is overheating a little bit. Economic snapshot, CPI 4.2%. So still hotter than what the Fed would like, but really, realistically, the Federal Reserve doesn't control inflation. I'm sorry, it just doesn't. Raising or lowering is not going to lower, the cost of oil or energy costs or food prices. It's just not going to happen. Yes, they can impact mortgage rates, but beyond that, they have no control over inflation. It's more of a signaling tactic that the Federal Reserve uses. Jobs were disappointing. Added 57,000, and most likely that'll be revised next month. The expectation was 113,000. So energy prices year over year, rose 23%, but again they've come down. Or starting to come down. And the average 30-year mortgage 6.5%. So still historically not tremendously high, but affordability, when you count other things, people are fearful of losing their job. The real estate market is really starting to cool off. The Fed and what comes next. So the Fed funds, meaning short term, but they have control, is they're shooting 3.5 to 3.75. June projections turn more cautious. The Fed's own forecast now see core inflation ending in 2026 near 3.3, up from 2.7. Again, they really, it's a guessing game. So projections, forecast, take it for whatever it's worth. They can change very, very quickly. Higher for longer rate path. Again, the market right now is thinking that the Fed is not going to lower interest rates. They're going to probably stay the course and potentially even raise interest rates. Again, I don't put a whole lot of credence whatever the Fed does. In essence, yes, it has an impact on the stock market, but the real economy, not so much. Soft jobs may keep the Fed patient. So meaning if there's employment numbers start to look worse and worse, which they are, then the Fed may say, well, you know what, inflation still not at the target that we want it to be, but now we have the other mandate is jobs. And again, I'm sorry, but the Fed really doesn't control inflation or job creation. That's just a signaling tactic that some people place a lot of credence onto it. And bottom line is, so just want to leave you with this short video, how we manage your portfolio. We monitor your portfolio daily. That doesn't mean we're going to make changes, but we get stock market research, technical research from technical traders, and it's looking at trends, which direction potentially asset class that we're in may be going. We don't believe in the buy and hold. Markets change, and we believe your allocation should too. We take an active tactical approach rather than just kind of set it and forget it. That's very dangerous because the markets are really peaking. There could be a pullback. I don't know if it's in a month, 2, or this year. Nobody knows for sure. But we are very cautious right now. Positioned for probability. So we strive to allocate client portfolios to asset classes we believe have the highest probability of making money rather than losing money. Again, past performance is no guarantee of future performance. But that's our goal. Number one is risk. We don't want any client losing, 30, 40, 50%. So, wishing again all of you a safe and happy 250th Independence Day. Happy birthday, America. And hope you have amazing get-togethers with family, friends, and especially family. So all the best. Again, happy 4th of July. And I do want to, just real quick, do a recap on the stock market. If I find my place, so sorry for this. Well, let's start with interest rates. Why do I always keep talking about interest rates? Because they have a huge impact on the economy. It's a much larger market than the stock market. So if we look at 1 year, we can see it's just been trending. Interest rate, this is a 30-year bond, always paying 5%. So it was going down, now it's going back up. If we look at the longer term trend, eventually this is what we want to see, and that's where we'll get into long duration bonds. So we're still not there. Maybe it's going to happen this year, but if it does, this is where we can tremendously add value, meaning that strategy that we use, that we allocate to asset classes that have the greater potential of making money for our clients. If we look now at the stock market, one day, meaning yesterday on Thursday, S&P was kind of flat. Technology QQQ was down almost 1.7%. If we look at 1 month, we got out actually right here, kind of call it a peak, maybe not a peak, but June 30th, we were out of the market, and then markets kind of start to trend down. Is this a trend that's a long sustained trend? We don't know. But we did get a signal from our technical traders that maybe it's time to consider going back into the market. So we'll just wait after the holidays. People will think, kind of rethink maybe their strategies, and let's see what happens on Monday next week. So on that note, again, thank you for watching, and we will see you next week. Take care. Bye now. Again, happy 4th of July day tomorrow. Take care. We'll see you soon. Bye now.